Thanks for clicking on the video. Today we are looking at Bed Bath & Beyond Inc. ticker symbol BBBY. We're going to be looking at the fundamentals of the stock to give a fair value because this stock has gone crazy in the last 24 hours. Went from almost $17 a share, shot up to $26 and is now trading at $20.18, which is still up 20% on the day. We're going to be looking at the fundamentals of the stock and then giving a fair value, my fair value of the stock based on discounted free cash flow, and then we're going to be looking at the Warren Buffett, Ben Graham indicator to give what they would value the stock as also. So let's just quickly go into why the stock has gone up. But first, can you please give a like on the video? Helps me out. Subscribe if you're not already, and let's get on to it. So Bed Bath & Beyond up on Kroger deal and share buyback plan. It surged more than 60% in the pre-market due to the certain business developments such as accelerated share repurchase plan, leadership changes, and the launch of its digital marketplace and partnership with Kroger to sell home and baby products on its online platform. It is a $1 billion share repurchase program by the fiscal year of 2021, which is way ahead of schedule. They bought $600 million in shares, and with $400 million being ready to purchase. So let's have a look at my steps to see why, to see the fundamentals of BBBY. So you can see it's consumer cyclical. It's got a market cap of around $2 billion, and that share price is changing dramatically, but around about $20 a share. So firstly, PE ratio less than the market. The PE ratio of Bed Bath & Beyond, it's currently not a profitable company, so I've got it as a 0, so that is a fail. Next is the revenue increasing. No, revenue has gone down over the last 4 years, 12 billion to 9.1 billion. The next step is the profit increasing. Well, as I said, we know it's a negative company, gone from 137 million in the red to 190 million. So that is once again a fail. Shares outstanding decreasing. Well, I think we both know the answer to this. Yes, they have. They bought back. They went from 139 million shares to 121 million shares. So massively buying back their shares to give the shareholders as much value as possible. And is the free cash flow increasing? No, it's gone from positive 600 million to minus 87 million. Now, one of the reasons this is the case is obviously due to the share buyback. So they're using their free cash flow to, buy back shares. Next, you can see here, passes. We have one pass. The free cash flow ratio, we're in negative. We can't look at the free cash flow and they don't pay a dividend. So let's get on to the valuation. This is with calculating the future free cash flows. They were negative in 2021. I've calculated the future free cash flows, but as you saw, revenue is down. So therefore, discounted free cash flow, the future free cash flows of the company are down 85 million, 85 million, 84, 77. So if we just have a look at what discounted free cash flow gives the stock, that would actually give it a calculated stock price of $19 a share, which is currently means it's at a 5% overvalued. So looking favorably on the stock. But if we were to get values that were similar to 2019, let's say, and we'll just change the model a little bit here to get something a bit more similar. The problem is with negative free cash flows, this doesn't do the stock very well. But if the free cash flow was about 170, then this would be a $37 stock. That does seem a little bit high, but it's hard to value the stock when the discounted free cash flow is negative. Next, earnings per share. The Buffett Graham intrinsic value. This looks at earnings per share, expected growth rate. It has a massive expected growth rate of over 89%. But once again, the earnings per share is negative, so it completely destroys the model. So what I'm going to do here is look at, this is from the NASDAQ, and this is looking at sort of earnings per share that was quarterly registered. So what I'm going to do is here, look at this one, 0.04. And I'm just going to put that in the model here. And then still, once again, fair value of $7.44 and a grand price of $5.58, which is buy and hold. If you ever see that price, you would buy now. So let's just quickly go back to there and see if it was 0.5, 0.4. Once again, if we put it in as 0.05, still undervalued. If it was managed to get 0.4, then it would be a no-brainer, but I don't think that growth rate would be the same. So the analysts are expecting massive growth rate, but the earnings per share is still too low for these valuation models. Let's have a look at some of the technicals here because they'll probably tell a very interesting story. Let's just look at the stock over the last year. I mean, it's been a wild ride. This was, I believe, one of the initial short squeeze, and it's happening again. This is not a short squeeze, supposedly. This is because of the stuff I read in the article, but very interesting. You can see it's sort of every, 1, 2, 3, 4, 5 months. Once again, 5 months. So interesting to see. But let's have a look at some of the technicals. We'll get the year to the date. We'll get the 100-day, 200-day, and the 50-day. They're the moving averages I like. So what are interesting things that we're seeing? Well, on the negative side here, you could see a series of death crosses, which then showed that the price crossed below here, and that would have been negative sell movement. Even with the price on that spike to $26 a share, it still hasn't broken above any of the moving averages. Now, this is because of all these price movements here. So moving averages is pretty difficult to look at in this stock, because if we look at from the year, it was $52, it was as low as $12, and it's now at about $20. So it's all over the place here. The other ones I like to look at is MACD. Let me just get the indicator up of the MACD indicator here. Moving average, convergence, divergence. And what this is saying is the buy signals when the signal line crosses, or when you can see in the histogram when it goes green. So you would have bought here at, what is that, around about $13, $14 a share, and you would have been made money sort of hand over fist, would have doubled your money there. You can see the stock has been in a lot of negative trends, but when it has been positive, once again, crossed here, went from $24, and you could have sold at any point. You could have took your profits at 40, and once again, that would have been a massive one. So these swings on Bed Bath & Beyond have been massive upside. So you could wait for this one to settle, and if this one happened again, then you could make a lot of big money on that one. But it's difficult to say. I mean, this price movement is massive. These ones were such very vicious movements on the upside, where the signal lines both went over zero. But now it's definitely bullish momentum in the short term, but it would have been a buy here, and you probably would have sold and took your profits. Next, we want to look at the RSI, and this is the I've gone on the financials again, apologies. This is the relative strength index. And what we'll do is this will show when the stock is in overbought and oversold regions. So you can see here, quick look in the chart, when it's been in the overbought regions, has been on these massive spikes that's happened 3 times the share. But if we look in the undersold regions, these would have been your buy signals to buy it, because it actually hasn't been in the undersold underneath 30 for basically the entire year. In fact, if we scroll out, you can see the last time it was down here, and you would have bought at the lowest and held, and depending on when you were lucky enough to sell, you could have sold up to $54 a share. But as you can see here, it's shooting up massively. It'll probably could go up for a bit longer, but then once again, when it's in the overbought regions, it has dropped off quite aggressively each time. So RSI, if you see it in the low end again, I would say it's probably a buy, but just be careful on the high side. You might catch a bit more momentum on the up, but more than likely it looks like, from looking at these, it's gone up and then down, and then this one hasn't gone up as aggressively, and then this one is not actually crossing over the 70 boundary. So very interesting. Interesting stock. Not one for me, I don't think, but people have bought it at $14 a share and it's now at 20, or they originally bought it at $20 a share and sold at 50, then very good for them. But I think, yeah, be careful on the technicals right now. Right, guys, thanks for watching. Please leave a like on the video if you've enjoyed it, and I'll catch you guys next time.